Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and we're glad you're joining us today. We're starting off with a look at the current market structure, and it seems like things are looking quite stable, both globally and domestically. The macro data points are in check, and all eyes are now on what happens on the tariff front, particularly after the recent Vietnam-US deal. But as we always say, stability can be fleeting, and it's essential to stay informed. We've got some interesting insights from Hemang Jani, an independent market expert who shares his thoughts on the market. According to him, the key factor to watch out for is the earnings season, which has just begun. The previews are starting to come in, and it remains to be seen if we'll see any positive surprises in terms of growth. One stock that's been making headlines is Nykaa, and Hemang Jani doesn't seem too optimistic about it. He mentions that the numbers aren't looking great, and the only time it sees some momentum is when there are flows because of index weight increases. Instead, he prefers other new age companies like Swiggy, Eternal, or Policy Bazaar. We'll also be keeping an eye on IndusInd Bank, which has seen a sharp revival in recent weeks, despite all the news flow. Hemang Jani thinks that the worst might be behind us, but it's crucial to wait and see who takes over as CEO and what changes they bring to the table. As we move forward, it's likely that we'll see some sector rotation, with commodities and pharma doing well. Banking, on the other hand, might underperform, at least in the near term. So, it's essential to stay vigilant and adapt to changing market conditions. That's all for now. We're just getting started, and there's more to explore in the world of stocks and finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and investment, where the stakes are high and the players are always on the move. Today, we're exploring a fascinating story that's making waves in the financial sector. It appears that BlackRock, the world's largest asset manager, has made a significant investment in a Chinese company called China Construction Bank. This move has raised eyebrows among investors and analysts alike, as it marks one of the largest foreign investments in a Chinese state-owned bank to date. But what does this mean for the global economy? And how will this impact the balance of power in the financial world? To break it down, let's take a closer look at the numbers. BlackRock's investment is reportedly worth over $1 billion, which is a significant chunk of change, even for a giant like China Construction Bank. Now, some experts are hailing this move as a vote of confidence in China's economic future, while others are sounding the alarm bells, warning about the risks of investing in a country with a complex and sometimes opaque regulatory environment. As we navigate this complex landscape, it's essential to consider multiple perspectives. On one hand, BlackRock's investment could be seen as a strategic move to tap into China's vast and growing market. On the other hand, it also raises questions about the potential risks of investing in a country with a history of state intervention in the economy. To shed more light on this story, let's turn to an article by Peter Hodson, founder of 5A Research Inc., who argues that new market highs are not necessarily a sign to sell. According to Hodson, new highs can actually result in higher investment confidence and FOMO investing, which can drive more buying and support the market. However, it's also important to consider the potential downsides. As Hodson notes, small and mid-cap companies might finally see some bids, but this could also lead to a valuation disconnect between large and small-cap stock. As we weigh the pros and cons of this story, it's clear that there are no easy answers. But one thing is certain: the world of finance is always evolving, and investors need to stay informed and adapt quickly to changing market conditions. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up another informative episode, and I'm excited to dive into our closing segment. As we explore the ever-evolving world of finance, it's essential to stay ahead of the curve. Today, we're going to discuss the recent developments in the crypto space and how they might impact your investment portfolio. As you may have heard, SoFi has announced its re-entry into the crypto market, which could unlock a massive new revenue stream for the fintech company. With stablecoins and crypto trading poised to drive significant growth, it's no wonder investors are taking notice. In fact, SoFi's stock has soared to multi-year highs on the news. But what does this mean for you, our listeners? Well, as we always say, it's crucial to approach any investment opportunity with caution. While SoFi's move into crypto may present new opportunities, it's essential to consider the regulatory landscape and potential risks involved. On the other hand, some analysts believe that SoFi remains undervalued, even after its recent stock surge. With a valuation multiple of 16x EBITDA, compared to its crypto peers like Robinhood and Circle, there may be room for growth. However, it's crucial to remember that past performance is not necessarily indicative of future results. As we navigate this complex landscape, it's essential to stay informed and adapt to changing market conditions. The rise of digital assets is undeniable, and companies like SoFi are positioning themselves to capitalize on this trend. But as investors, we must remain vigilant and prioritize risk management. In conclusion, the crypto space continues to evolve at a breakneck pace, presenting both opportunities and challenges for investors. As always, it's crucial to approach any investment decision with a critical eye, considering multiple perspectives and potential outcomes. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.